All right, we are live. Happy Friday, everyone. April 3rd, this is Anthony Anderson, co-founder of Elite Resource Team. We've got a full call today, close to 170 people or so registered. I see close to 100 already on with us. So hope you're doing well. It is 11:30 out on the West Coast. That make it 2:30 on the East Coast for those of you who are joining us. This is our Emergency Loan Task Force educational webinar here. If you did not attend last Friday, no problem. Let me just do some brief introductions. The purpose really is to just give you some information as up to date as we have on the COVID-19 stimulus packages and the proposals. I'm merely here to do the introduction, and I'm going to turn it over to our task force that is made up of 3 of our veteran mastermind members, Marilyn Prevoir, Michael Sims, and Andy Bowman I have on with me. And then also one of our specialists, Ben Golden, who is an accountant. So the 4 of them have been working around the clock just to make sense to the extent that we can of what's going on right now. They're going to give us a good overview as well as an up-to-date picture. We'll do our best to answer as many questions as we can today. So without any further ado, thank you so much, the 4 of you, for stepping up and being a huge asset, not only to the ERT community and the CPAs partnered with the advisors on the line, but also to all of the communities that everybody on this line serves. I think we all share my appreciation for what you're doing here. So Marilyn, let me go ahead and just turn it over to you.
Thank you so much, Anton. And once again, thank you for allowing ERT to put this task force together. I'm going to start real quick and just say thank you to all my partners on this task force. Ben Golden, you have just been tremendous with the dedication of your time and resource to us, and everyone in ERT wants to say thank you. And Michael and Andy have been really patient with me this past week trying to get things organized, so I appreciate that as well. We're going to go ahead and flip to Andy to kick us off with these first few slides. Andy?
Okay, hello everyone. Just to give you an overview that this is chaotic. I know many of you have been following this. Even the large bank institutions are sending out mixed information. So just to let you know, information provided is based on what's publicly available, what's going on right now, research and guidance from experienced professionals. Key questions still may remain unanswered, and as details come out, we'll try and keep you abreast, but stay educated yourself. Elite Resource Team, the task force, ERT specialists do not accept any liabilities that relates to the content of information shared and are under no legal duty to update such information. We're happy to provide you with education and pertaining to these new programs. We're not agents, packagers, brokers, and cannot assist you with obtaining these funds. Borrowers should consult with their CPA attorney and financial advisor for additional insights. No one is expert on the CARES Act right now. Guidelines are still changing. The banks don't have any better handle on this than we do. We are sharing the best information we can at the moment. Continue to self-educate, encourage clients to be patient so loans get done right and they receive their funds. Housekeeping, today's presentation is an overview. There's no possible way we can deliver every detail of the emergency loan programs. Many of them aren't even out yet. We are going to keep the presentation as short as possible to allow for Q&A. So jot down your Q&A, type them in the box. Please type the questions in the chat box. I just said that. A recording of the PowerPoint will be posted as soon as it's available. Q&A should be program questions. Do not ask client specific questions or situations. Keep those for the discussions inside the Facebook group where we can address them more concisely and clearly as information evolves. Reach out to the task force for specific questions. We'll try and find answers, and please post that on the Facebook group and use the hashtag SBAC19. Once again, we're trying to keep you focused and on target. We don't want to be a loose cannon. We're going to do our best to share what currently is known or pending, but details are subject to change. It is still unclear how long it will take for this to funnel down through the banking system. Some banks are ready, some are not, some will not participate. I've heard reports that some of the people who have applied for the EIDL loans have gotten the funds, the $10,000 in their accounts. I've heard other stories that people who went onto certain sites at big banks and applied for the PPP who should have qualified were denied. So it's all over the place out there. So it's going to take a while for this situation to stabilize across the board. Traditional SBA loan processing will likely be tabled for several months while efforts go into the responding to the CARES Act and the COVID stimulus relief programs. And there's already talk of more stimulus coming down the pike. Team-based model resources, you get the ERT team-based model value partners helping sort this out. Ben and many specialists over at Multifunding have stepped up and given us their insight because this is their focus. Many of Multifunding has been doing loans for quite a while and is a vetted ERT partner. Ben has been a member organization. He's an EA, and he helped with the emergency loans coming out of the oil crisis, the oil disaster in the Gulf. Multifunding is a tremendous educational source at this time. They cannot assist with assembling loan packages or placing loans. That has been one of the biggest questions, and it remains one of the biggest gray areas in this whole thing. Who can get paid for doing what? We're going to try and address what we know, but at this time, there's people out there charging, there's people out there not, but that clarity is not completely there. Important to self-educate. Keep an eye on our Facebook page, and if you come up with information that can clarify that, feel free to post it, but verify before you post any kind of information. The link to Multifunding daily webinars is here. You have that on the Facebook page. The task force is here to help. We need to manage communication so we don't overwhelm the specialist. And with that said, let's start digging into the specialist.
Thank you so much, Andy. This is Marilyn, and we let Andy drop the bomb about multifunding, and I'm sure a lot of you on the call are very disappointed to learn that at this moment they cannot assist with these loans. We want to give you a brief explanation of what is going on. Multifunding has been doing daily webinars for weeks and consistently stated that absolutely no one was clear on how those loans were going to filter down. Guidance just started to come out on April 1st, and Multifunding has communicated with all of their lending partners. None of the banks that they work with even want to participate in the program. There is no room for brokers in these transactions due to the low reimbursement to lenders and the regulation that borrowers cannot charge any fees. So please understand, the banks are getting a reimbursement fee from the government. It is minimal. It is not even covering their operating costs. So third parties being involved is just not practical at this time. That being said, we have been in extensive discussion with Multifunding. They are going to continue to do all of their education and updates. And most importantly, we need to recognize that this is only one piece of the puzzle. And it's very likely that there will be opportunity for back-end loan processing on the flip side of this. There'll be no shortage of clients who need capital, and we just don't believe that these PP funds are going to be enough to solve the problem. Even for people who get the loans, growth capital needs or funds to continue to restabilize will be out within a few months for many. The PPP loan is going to buy them a little time. Banks who are not participating in PPP will be looking to make other loans after the dust settles, and they will have the capacity. When we get to that stage in the process, Multifunding is already ramping up and preparing to be able to sort through all of this and be able to support all of our ERT advisors and all of our CPAs. Most importantly, we acknowledge that there are groups out there on the internet stating they can get these loans done for you. ERT is in no position to recommend or discourage those options. We have to encourage you to do your own homework. Anybody who was on the Multifunding webinar earlier heard Ami's statement that there was a company out there taking applications who suddenly today stated they can't fund them. So in terms of who you're using, obviously the client's lender should be the first option. For some clients, that's not an option. So be careful who you're working with, do your due diligence, and remember that the lender who funds the loan is responsible for calculating the forgiveness amount and the final loan balance. With that, we're going to jump over to Ben Golden, and Ben is going to take the next couple of slides to give us an overview of the programs and where they are. Thank you, Ben. Take it away.
So thank you so much. First, I want to say that, our goal is to give you an overview. It's not intended for us to give you the fine print details or the red tape involved with the CARES Act and all of the specific intricate details included in the CARES Act itself. So make sure that you do your research. I want to make sure that the intent of Congress with the CARES Act is looked at. Don't discount this, because understand Congress is trying to give a shot in the arm for companies to ensure that their number one asset continues to stay with them. That number one asset, as we already know, are employees. We want to make sure that we keep our eye on the end goal, and the end goal is we want to try to get money in order to bridge the gap. So do not commit fraud in any way. To make sure that if you have an expense that you may consider as a forgivable expense, or if you have an item that you are not 100% sure of that would be included in the PPP calculation for a maximum loan, make sure you do your due diligence. Do not commit fraud. Do not help or aid or abet any of your clients in doing so. The feeling from me when you look at the applications is it's a lot like the TARP funding. So there was a lot of fraud committed. We just don't want to go down that road. A lot of people have said, oh, we don't have to worry about the forgiveness, the allowable forgivable expenses, and we're not going to have to worry about that. So we can just use any numbers that we want to. Remember, we can't look at audit risk for any reason and not being able to give the proper documentation. And that's, of course, for CPAs, attorneys, and EAs. Circular 230 does talk about audit risk and us not being able to look at it. Changes have happened. They came down the pipe yesterday, 2 days ago. They came down again. Everything is so very fluid, and I think that it's just funny that the government has given us interim final rules. I mean, really, interim final rules. Now, I understand that they're going to change, or they have the right to change these final rules within the next 30 days, thus them being interim. But why not just call them interim, right? Welcome to our government. If you can go to the next slide, thank you so much. So just a brief overview. If you have a payroll tax credit or a retention credit, that cannot be used with PPP funds. If you get the PPP loan, you are not going to be eligible for the employee retention credit and most of the other credits. You need to look back at those rules specifically to see if you are. Now, there is a question to see if you apply for the PPP loan and then you do not sign the documentation and do not get it, are you going to be available, or are you going to be eligible for the retention credit? So there are a lot of ways that we can look at being proactive and trying to plan the best way that we can. The PPP forgiveness loan is not going to be the best option for all people. Make sure, if you do have a client that you're wondering, should we do this, yes or no, get closer to that 6/30 end date before you make that decision, because once the decision is made, you can't go back. understand that the PPP still does include loan forgiveness. So if you get a loan and a portion of it is forgiven, you will not have debt income for next year. The SBA is still doing the EIDL, so understand that you can get the PPP and the EIDL. One thing that a lot of people are talking about that just came out yesterday is if you get the EIDL grant and you apply for the PPP at the same time, then the grant itself will reduce the allowable forgivable amount. And let me give you an example. If you got a PPP for $100,000 and you got the EIDL grant for $10,000, the maximum allowable forgivable amount for the PPP would be $90,000. Understand that you still have local and state governments that have programs that you should look at if you need cash for your client. Cash is king right now, and your clients need to hold on to as much cash as they possibly can.
Ben, thank you so much. Ben will be coming back with us in a couple of slides. And right now we're going to pass the baton over to Michael Sims, who's going to run through some details of how to access these funds.
Good afternoon. Well, first off, I guess the answer to that is nobody really knows. There are widespread statements by banks that they are on the backside a little uncomfortable with the underwriting and responsibility of the loans. So actually within the hour, Forbes had an article out where JP Morgan Chase, as well as a couple other major national institutions have taken a pause on accepting applications. Bank of America came out at 9 o'clock this morning with a stipulation that you had to have an active business loan as well as a business checking account for them to accept your application. And as a result, they were kind of had their ears pinned back by a few senators. And so we're looking right now, in a nutshell, the banks are in chaos. We were trying to talk to them yesterday. They were in chaos. They don't know how to manage this at that level. What does that mean? I think it's a good thing for us in that we can preach calm and patience to our clients and keep engaging with their business banking relationship. I would imagine the weekend is going to give the banks time to fulfill their process internally of how they're going to manage it. Most of these will be online processes where the applications will be submitted. That being said, I know that several CPAs are charging fees for conducting consulting for the program and not specifically for the loan, because the program says you can't have it specific to the loan. That being said, the new application has a place on there for the agent to sign and potentially benefit from the fees that are generated from the loan. Above all, I would say from our standpoint as advisors, this is a wonderful time to earn trust and preach patience with our clients. I know we have created a lot of very, very productive relationships with people that we never had conversations with simply because we're willing to guide them and give them information that no one else is willing to give them. The EIDL, again, that's the easiest to feel like action's moving. You simply have to point the client in the direction of the link that's up there on the screen. It's about a 3-page application. Once they do that and submit it, it puts them in the queue. Do not have them do it a second time. It'll slow down the process for them. As Andy mentioned earlier, there are some people reporting having gotten the $10,000 emergency grant posted in their accounts. But again, realize that the crush of how many people applying, it's taken them time to process it, which is why the banks are so freaked out. I think one of the delaying tactics is so they can manage the process. Ben talked about being able to participate in both the PPP and the EIDL. There is a express, the banks, if they're SBA certified, can assist the client with an express $25,000 line of credit. They can start that, and when they're offered the EIDL loan, that would just fold up into the EIDL loan. SBA and the Treasury Department are working together. So I would encourage you to post the treasury.gov website, go there frequently, as well as the SBA. That's where the core information is going to be. Everything else you see on the internet. I've seen all sorts of things on LinkedIn where people are using old news, where information has not been updated. So please just remember, the only two places that have the real information is SBA.gov and Treasury.gov.
Michael, do you want to hit on the small business debt relief real quick, and then we'll move on?
Yeah, small business debt relief program. Again, that's, SBA is overseeing it, the 7A principal and interest. When those loans come out, the real huge benefit is there's 6 months of forgiveness. If the client has already an SBA loan, they are automatically included in that program. But you should encourage your client to call the bank that's servicing that loan and make sure that they are included in it. Don't assume that the bank, again, there's chaos in the banks right now. They don't know how to handle the directives that the political element has put down on them, and being somewhat conservative, they're pushing back. So, have your client or work with your client to get in touch with the banks and really make sure that they are in line for that debt relief program.
Hey, Michael, clarify that that first bullet point, those are payments, that the principal and interest payments are forgiven.
For principal and interest on all SBA loans.
On payments.
Correct.
Yeah. Keyword.
Okay. Thank you very much, guys. We're going to move on now. I just want to make one quick comment for anyone who's concerned. This PowerPoint will be posted in the Facebook group after the presentation. Going on to our next steps here, Ben Golden is going to come back on the line, and I encourage all the accountants and CPAs, this is where you really want to be taking notes. Ben's going to be sharing some very important information with you.
So as we both know right now, or as we should know, you can apply for both the PPP and the EIDL, but you cannot use the funds for the same purposes. So what we are telling people is you need to take the funds from the PPP, put it into a separate account, and then any funds from the EIDL and put those into a separate account. Yes, we're asking you to create 2 brand new accounts, but for tracking purposes, you want to make sure that at the end of the day, you can easily track and trace all of the expenditures from the PPP, because we do have to prove back or tell the bank how much we would like to have forgiven. When the bank looks at this, they are not going to be educated on what they're looking at. So therefore, we need to have a package that goes back to the bank on what should be forgiven as well. So in my opinion, you have a package for the PPP when you first start it that shows the calculation of what the maximum forgivable loan should be. And then in addition, you should have a different package where you are essentially given receipts as to why funds should be included as a forgivable expense. You want to make sure that you understand how that is calculated. Some of the rules did change when they came out last night in regards to that. Things like only 75% should go, 75% or more should go to payroll expenses, and that is going to be defined as a payroll cost. We also learned last night when the interim final regs came out. It's funny to say. When the interim final rules came out, payroll costs are not going to include independent contractors. So, as we move forward in this process, they're going to change the rules more often as we see. So understand most of the things that we're looking at are ambiguous at best. I want to encourage you there again, use some type of accountable reimbursement plan where you have to have some type of receipt to have the funds withdrawn from that specific bank account for the PPP. One of the other things that we want to discuss here that's a big item is the fact that unemployment is a very big item in the CARES Act, and how to rehire, when to rehire, understanding how to calculate a full-time employee, when should we do that? All of these rules are in the PPP, and it just creates another planning opportunity for you as to, should we do the PPP? How many full-time equivalents do we have? Do we have enough to hire? Are they going to come back? There are so many questions we need to answer. Track and qualify your expenses for the forgiveness, like I said a moment ago. Now, let's talk about unemployment for just a moment. The Family First Coronavirus Response Act gave us some flexibility. However, it also created a problem, and I really don't see a good solution in the short term. As we all know, the federal government is given an additional $600 per week for unemployment in and above your state mandated amount. However, the state mandated amount is also lengthened. Employees may not want to come back to work because they're making more money at home than they are at work. And this is the problem without a solution. If you need to rehire and some of your employees choose not to come back because they are making more money, you need to reach out to unemployment for guidance. Different states have different rules, and you need to make sure that you understand those rules for a rehire, as well as what or who could be considered a new hire. This is a service and revenue opportunity for accountants. The AICPA has come out with additional guidance, and it could mean that other things could be charged. So make sure you understand the guidance and the rules. I think that this is a place that you could or should be conservative. Remember, like Michael said earlier, this is an opportunity for you to create unbelievable value. If you really want to know what the lifetime value of a client is, help them out when no one else can. And the lifetime value of that client will be massively increased. I have a lot of experience with the BP claims, and I found that 80% of the people that came to me that were new stayed with me, not by any fault of their accountant or CPA at the time, but because I was able to help them out in a time of need. So this is a time for you to create extreme value. We all have pressure for making sure that our employees stay employed and making sure that we pay all of our bills, but just make sure that you take care of the clients first. For me, I'm going to write a letter with the bank to the bank in calculating the PPP to figure out exactly what that calculation should look like, and then also use a calculation worksheet to go with that letter. That way they can use the backup. Remember, bankers want us as accountants helping them, because if they don't, some logger is going to go in and ask for a PPP, and all they're going to have is bank statements. And then the banker is going to have to quantify what that looks like, and they really don't have the time, energy, effort, or resources to do it. make sure you track every single expense. And like I said, I can't push this enough. Treat it as if it's an accountable reimbursement plan. Now, the disaster relief loans, there again, I think that you should package that for the client, and then you can charge up to $2,500 without disclosure. And there again, it's unclear if this will be amended, and also it's unclear if we have to include all the disclosure forms, because it does ask how much did you charge. All right, Marilyn.
All right, Ben, can we just hit for 1 second on the fact that nobody knows what the qualifications for the disaster loan are going to be right now?
Yeah, definitely. You know, we don't have any type of regulation, rule, underwriting, anything. All of it is questioned right now. I had one client come to me and ask me, are we going to have to give all of the same documentation that a typical 7A is going to have? And the answer is we don't know. I believe that they're going to make the regulations a little less stringent, because they want to get the money back to the companies, even with EIDL. I think that what we need to do is wait, because the banking industry gets a different regulation than the normal people, us as accountants and everyone else. They get different qualifications, and that's why you see so many banks have different regulations, because they're trying to protect themselves as well.
Ben, thank you so much. We are just going to do a very quick summary. We tried to make the presentation as quick as possible so that we could get to Q&A. So obviously moving forward, payroll protection and EIDL should be our focus. If you're not attending the multi-funding daily webinars, please do that. It is a wealth of information. The ERT members on the call have access to all of the resources that we are going to be posting in our Facebook group. Please share all of those resources with your accounting partners, and the task force will continue to post important updates and schedule these calls as necessary while we all learn about our new normal. Before we start the Q&A, I'm going to have Michael and Andy. We'll start with Michael. Just give us a quick 60-second rundown of how we should be handling this and what the opportunities are.
Great, thanks, Marilyn. I've been marketing to everyone I know, be it a business owner, CPA, whomever, people I've lost contact with, and just been offering them updates and advice, and emphasizing that we are spending our time as a firm focusing on these programs. We say, you know, our approach is that the intent of this program is to get money out to business owners so they don't have to fold their businesses up. When we have done that so far, we've gained 2 new microbrewery clients, a high-end restaurant. We've picked up a client who has a multi-specialty medical practice that has a $5 million monthly payroll, and we're in discussions with two farmers out in California. That was done by nothing but pro bono advice offering, and no one else is speaking. No one is speaking to the small and mid-sized business owners about this proactively. So that's a great opportunity. Andy?
Yeah, I know I've got a couple of accounting relationships that are out there, and they're both handling it differently. Not to contradict Michael, there are a few people in the accounting marketing space that are pushing that accountants should be charging $24.50 to do these services, and they're pushing it pretty strongly. I think there is room for that. You just have to make sure you're delivering the value, and probably being more of a CFO and more of a budget person. You know, how many accountants here have wanted their business owners to sit down and create a budget? This is a huge opportunity for you to do that. Help them do the math, help them look at their payroll, look at their hiring habits, and help them figure out, are they going to be better off financially, can they survive bringing their people back, hoping to get reimbursed on the loan, which they may not, versus letting their employees go home, get the unemployment benefits, and we'll see what happens after July 31st. Remember, these businesses have to have the revenue at some point in time to make these payrolls. Now, granted, we all believe that there's going to be probably stimulus 2 and stimulus 3, but we don't know what that looks like. So it's our responsibility as fiduciaries and as financial consultants to help equip our businesses with that toolbox. And this is where you're going to be able to charge. It's also, and if you're already consulting and charging a flat fee, roll that into your package. One of my accountants, they're not charging any of their clients to do any of this work. They're going to do it as part of their current package, and they want their businesses to stay open. I've got another accountant I work with. He's charging $24.95 for everybody that does this, and he's using it for marketing. So I've got them all over the place. You run your business, but do it for the benefit of the people. It's going to come back in spades. We need to get this economy moving. I hate that it's going to be a government bailout that's going to bring debt to our great grandchildren, but this is the moment we're living in. Let's get America moving again. I think we're going to find out that every job in America is an essential job. Everybody is essential to this economy. Let's get this economy moving. And with that, I want to thank our specialists. I want to thank our team here. And we're going to try and answer your questions. I'm going to be quiet.
Thank you, Andy, and thank you, Michael. We're going to move into the Q&A now. I'm going to do my best with this. Please be patient. First question, can we get a copy of the presentation? Yes, we will PDF it and post it in the Facebook group. For the ERT advisors, please pull that down and share it with your CPAs. Next question, is there any information on the EIDL 10K advances as to whether they will be forgiven or taxable? Ben, I'm going to ask you to take that one.
So if you get the EIDL in conjunction with the PPP, it will reduce the forgivable portion of the PPP. So therefore, while the grant itself may not be taxable, it creates an amount that has to be paid back. Now, so far as taxable, the answer there is we don't think so. This is a loan coming from the government that has to be paid back. The question that we don't know right now that we're waiting on guidance on is, let's say that you request the loan, you get the $10,000, the loan comes in, then you reject the loan. We don't know if the $10,000 is going to stay a grant, or we don't know if that loan is then going to become a loan itself.
And the next one's going to be for you as well. If someone has applied for the EIDL advance, will they be asked to complete the loan application for a larger amount?
So when you go in and request the amount first, it's a very short 5 to 7 minute application. The rules state that you have to have a successful application to be qualified to get the $10,000 grant. They're not going to just give the grant out to any and everyone that fills out a 7-minute application. So you want to make sure that you have a successful application. Now, what is defined as successful application? We don't know yet. I think that it's still going to have to go through some sort of underwriting from the SBA to look to confirm the information that was on there. However, we're not certain yet because we don't have that information.
Okay, this next question, I'm going to jump around within the task force. For the EIDL advance, do you know of anyone who has actually received the 10K yet? Andy, what's your response to that?
Yes, I'm part of many local support groups or many support groups. Yes, we've got reports that the $10,000 has been distributed, and that was the amount they put down. So I'm not going to argue with them. So there is a yes.
Okay, Michael, what's your experience?
Heard of it, not seen it. I'm still waiting for mine.
Okay. And I will share Michael's sentiments on my end. Plenty of applications in, none that have received the funds yet. Ben, what's your experience been?
So I've heard of people that have gotten funds from the EIDL. They got the maximum amount without collateral. They filed very, very early. However, I don't know about the grant itself. I think those people that filed prior to last Sunday have to reapply for the grant itself.
Okay. Ben, this next one we're going to push over to you as well. When is the deadline to submit an application? What happens when the $350 billion in funds runs out?
Great question. So the date to submit the application for the PPP, the last date to submit is 6/30 of course, June. So the next thing is, I think that this is grossly underfunded. The way they got to the $350 billion is, it is the average payroll for America for small business over a 6-week period. That's how they came to the $350 billion. We know that you can use these funds for up to 8 weeks. So we know that at minimum, we know that it's already underfunded.
Ben, we have a CPA asking, can you explain what you meant by audit risk?
Yeah, definitely. So as we all know, Circular 230 says that we cannot advise a client based off of audit risk. What does that mean? I can't tell a client, why don't you just take this position? They'll never audit you. There's only a 2% chance of audit. Just go ahead and take that position. That's what I mean by audit risk. We can't advise based off of a low or a small percentage that it may go through anyway.
Thank you. Okay, with EIDL grant and PPP combo, do you report the EIDL if you have not received the 10K grant when applying for the PPP? Kind of like which comes first, the chicken or the egg, right?
So for me, I think the PPP, you have to do projections for that client and see if it makes sense to do it or not. A lot of people are just jumping on board and trying to get the PPP because they have a larger payroll. If you have more employees, then what you may want to do is take the retention credit, because that's going to get you a $5,000 credit per employee. That way you don't have to pay your payroll taxes moving forward. So all in all, make sure that you do your due diligence. Now, in regards to which comes first, I think cash is king, and I think that if you do the calculations for the PPP and you think it's going to be great, I would do both, because we don't know how long this is going to last, and they're going to need the cash to either pay employees or, you know, overhead or something of that nature. And don't forget, don't let the tax tail wag the dog. What does that mean? Don't let the fact that you get this loan make the deciding point of, look, we're accountants, we have an opportunity to get most of this or all of this forgiven. Don't let that be the primary factor of your decision. If it's better for you to hold the cash and not pay it out and then pay it back as a loan and have your people stay out on unemployment because you think that it's going to take another 60 or 90 days to ramp up and you're going to need to pay your employees after they come off of the additional unemployment from the government on 7/31, then that's what you need to do. It's not about the forgiveness itself, you know?
Thank you. Next question we've answered, but we'll just reiterate it. If someone gets the grant and a loan for PPP, is the 10K grant still a grant, or is it now part of the EID loan? Ben, I believe you said that that is your understanding at this time.
So there again, you get the grant, and let's say you get $100,000 worth of PPP. That means that you actually have $110,000 in your pocket, but the maximum allowable forgivable amount on the PPP becomes $90,000. What we do not know yet is when you get your EIDL, if it is a successful EIDL, if you'll have to pay that $10,000 back or not.
Okay, Ben, we've got a technical question here. When reviewing for forgiveness, do you feel it's important to have the income as W-2, or should S Corp owners' distributions be included in addition to the current W-2?
That's a great question. Love it. Okay, when we're talking about reasonable compensation for an S corporation owner, Revenue Ruling 7444 gives us that definition. Okay, it says what compensation is, but more importantly, it says what it's not. A distribution itself is not considered compensation for an S corporation owner. It should not be included in the calculation when you figure out what is an allowable forgivable expense.
Perfect. This next one is very important because there's been so much confusion about this. Payroll costs do not include independent contractors. Can you please clarify?
Definitely. So we got great definition last night on the interim final rules. Page 11 of the interim final rules say that payroll costs do not include independent contractors. Independent contractors can go and get their own PPP. So therefore do not include the independent contractor amount in either figuring number one, the maximum forgivable amount of the loan, the maximum amount that you can get for the loan, or number two, the payments going back.
Thank you for that, Ben. This next question, I'm going to shoot over to Michael. There was a comment that this is a time for extreme value. Is that referring only to the accountants versus the ERT advisors on the line?
No, I think that for advisors, you got to remember that most financial advisors are sitting at home, filling the airwaves of LinkedIn and trying to electronically market, but they don't have a story. They don't have anything that's relevant to deliver to potential new clients. We have a tremendous resource in multi-funding the information that we have to be a solid solution provider to people in need. Pushing out that you're available to work with people and guide them and shepherd them through this process will generate a trust-based relationship so that when the dust settles here, we can continue the relationship and engage with the CPA teams. If they don't have a CPA, bring a CPA in. But I mean, it's amazing how many of these functional businesses say, yeah, I got a bookkeeper, but I don't have a CPA. And I'm able to bring my CPA that I'm partnering with down here in, and they're like, look, we need you guys. So the feedback that we've gotten from small and mid-sized businesses has been amazing because no one is engaging them with this information. Everybody's worried about the market going down.
Thank you, Michael. And I will speak for myself and Andy that we can both attest, as well as Michael, to the CPAs that we have been educating and supporting are actually getting new clients because they are so informed and so proactive, and other people are coming to them saying, my CPA isn't talking about this, I have no information. So there's a huge value for the CPAs to grow their books of business, as well as for the ERT advisors to be bringing more resource to additional CPAs. Next question.
Marilyn, and
yeah.
let me speak about that one thing. The lifetime value of that client is going to be exponentially higher because they feel like they owe you. And as long as you can continue to service that client and you do your job, they're going to stay with you longer because you are the one that saved their company. And they're not going to forget that. Remember, most of these business owners, their retirement plan is their business. Oh, I'm going to sell my business when I retire. That's how they're going to have money when they retire. So you're actually saving their retirement as well.
Marilyn, I just want to jump on this too, Anton, for a second. I think that was Ben. I mean, great comment. And I would just say, just remember, in times of chaos, people need clarity, confidence, and leadership. And we have a small window of opportunity to step up to the plate and really play that role and lead our clients. So, let's all jump on this opportunity to help the community and also obviously grow our businesses in the long term while we have it.
Thank you so much, Anton. And I truly believe that supports, we've got APA on the screen. It's our opportunity collectively as ERT advisors and CPAs to help fulfill the intent of the rescue package. And that's what we're all trying to do, help businesses save their business. Okay, moving on to the next question. Ben, if we're going to be applying for both loans, which one should we apply for first?
I think the first thing that I always do is I look at cash burn and see what is the cash burn going to look like for the client. I think you're going to get the PPP faster than you are the relief loan. So I would make sure that I would do the PPP first if it makes sense for them to do the PPP. And cash burn is going to be key here because they need to take as much as they possibly can out of their overhead and bring all of their expenses down as fast and as low as they can so they can continue to stay open.
Thank you, Ben. Next question. There's a couple of questions here about the multi-funding webinars. I'll respond real quick. Those webinars are every single day at 12 noon Eastern. And yes, they are different every day. Multi-funding is spending their whole night digesting any new information, and every day they are giving us the most updated information that's out there. Next question is for Ben. If an employer provides an HSA match, is that part of their payroll cost?
As long as that is included or paid by the company and a non-discriminatory benefit. Yes.
Great, thank you.
And let me also say this right here, Marilyn, I'm sorry. If that employee makes more than $100,000, make sure that you properly calculate the allowable, includable amount as well.
Thank you very much, Ben. I will just acknowledge, by the way, there's a lot of comments out here expressing their thanks to the task force and to you, Ben. We greatly appreciate that. Next question, regarding the PPP max loan calculation, does the 100K cap on payroll costs include or exclude the benefits?
So the $100,000 cap itself is just for the payroll. Since the benefits and retirement contributions and everything are listed separately, they should not be included. So let me tell you what that means. Let me show you what that means. If you have someone that makes $150,000 a year, of course their cap is 100. So that means that 67% of their income is going to be an allowable item to figure out the maximum amount of the loan. That also means that 67% of the health benefits that are paid by the company and 67% of the retirement benefits that are paid by the company are also going to be an includable amount to figure out the maximum loan.
Okay, and Ben, we're going to stay right on that train with the next question. I've received mixed messages. Do I include FICA expense in the calculation of payroll cost to determine 2.5 times payroll?
So that is one place that I will tell you is a little bit ambiguous. It says that you are not to include taxes that are covered under, I believe, chapters 21, 22, and 24. So I am taking only gross payroll. I am not taking the employer side of the taxes paid to include in a payroll cost.
Next question, perfect fit. I've seen Excel calculators for PPP. Do we have one that we can share with the group? Ben, do you have anything along that line or something you could recommend?
Yeah, I do, and I actually updated it to take out the independent contractors. The one I had also had independent contractor amounts in it, so that's something I can put into the group after this webinar.
Thank you so much for sharing that. Next question, I think you covered this. What are the rules for contractors? I would say we've hit on that, or do you want to expand more, Ben?
I would just say that the contractors have their own ability to get their PPP. And I will tell you, in my judgment, it is a little bit ambiguous as to how the forgivable expenses are taken on those on independent contractors and gig economy workers. The reason is because while we can easily figure out what the maximum loan is, what is going to be considered as a payroll cost when it goes to look at the forgivable portion? Most of these people, independent contractors, do not have rent. They don't have the retirement, especially built into their Schedule C. So the only thing that we look at is what is a forgivable expense going back. So that's a little ambiguous as well.
Okay, I will just acknowledge that we're getting to the top of the hour, but I can see that 99% of our attendees are still on, so we'll keep going with questions for a little while longer. Ben,
Hey,
can you get PPP?
Marilyn, let me jump in a sec. One of the recurring questions I've seen here is from, it looks like financial advisors from the ERT team members. What's your thought on financial advisors, not the non-accountants here, helping these clients, helping the business owners prepare the forms, prepare for the loans, counseling on the loans? I know what my answer is, but I want to hear you guys answer.
I think you should. I think you need to be, you need to do your research. Nothing is going to prohibit you from helping them. And, I think that you're going to create so much value for that client in you helping that they're going to be indebted to you in the long run. You create so much value by helping you. You almost do yourself an injustice by not helping.
Okay, Marilyn, what's your take
Thank
on
you.
it?
I absolutely agree. I think it just goes to qualification. So, in the scenario where the business owner does their own books, doesn't have a CPA, I would say just be very cautious that you are able to assist in a qualified manner to make sure that they're applying for the proper loan amounts, and most importantly, educate them to all the points Ben has brought up about how these funds need to be managed and where they need to have their focus.
Yeah, I concur. Don't overrun your skill set. Help as best you can. Be perfectly candid and transparent in all conversations. That this is a fluid situation. You're not the be all end all. You can help them with the toolbox you bring, and encourage them to bring on other toolboxes. I'm fortunate to work mostly through accountants, so I don't have that big issue of having direct clients. I've got a couple, and I'm working with them, but do your best, but be smart about it.
And, thank you, Andy, for bringing that up. And I'm going to actually pass that over to Michael for a second to discuss the opportunity to get those clients to one of your partner CPAs if they need that kind of help. Michael, do you want to jump in on that?
I just shared a bunch of wisdom nobody heard. I'm very upfront with saying, hey, look, we do business advisory and coaching. We are getting up to speed with this as much as we possibly can. I don't have all the answers. I work closely with some CPAs who have much stronger positions on this. But if we don't have an answer for you on a situation, we'll get it. that's our job. That's what we're going to do and assist you. And that's where the business owners open up. And quite frankly, the great next question is, do you have a CPA you're working with? No, I have a bookkeeper. Well, let's have a conversation and put a quick 3-way call together. And quickly they discover they need much more help than what they thought. When it talks to proactive coaching and planning, not just through this process, but in their business, they're realizing, hey, geez, I need to have this partnership working. So they want to continue it. So yeah, I mean, I know what I know, and I could put that in a thimble. I know I don't know everything else, but I'm pretty good at knocking down walls to get answers. And if you're upfront with them on that, you've set the expectation, and then just follow through.
Andy and Michael, thank you so much for all of that important insight. Next question for Ben. Can you get PPP funds if you have no employees, you only have commissions from insurance companies?
Well, I mean, I would have to specifically ask some questions. Number one, does your company get it? Do you get it in the form of a 1099? If you do, then you're going to be considered an independent contractor. So independent contractors or sole proprietors or single member LLCs, they're all going to have a calculation for their own PPP. So yes.
Thank you. Next one's a quick one. Is the EIDL loan a non-recourse loan?
It goes up to $200,000 without collateral. Without a personal guarantee, they're only going to get a person with no personal guarantee, no collateral. I believe it's capped at $25,000. Michael or Andy, do you know that answer?
No, I don't know.
I would be blowing hot air if I said I did.
I think it's capped at 25,000. I'm not 100% certain on that because the EIDL does have a personal guarantee. So that's something definitely you want to look into.
Is it not 200,000?
It's 200,000 with no collateral, but there's
Right.
still a personal guarantee.
Right.
Okay, Ben, hopefully you have an answer to this, and I will share that I have seen the same confusion myself today. Question, I got an email from the bank saying there's an update. People cannot apply for both EIDL and PPP.
I have not seen that, and I've not seen anything that tells me that. Matter of fact, in the interim final rules, it specifically talks about if you get the grant, then this is what you do in regards to the PPP. So it's very difficult for me to believe that if you could not apply for both, why are they talking about how you change the calculations for the PPP?
Thank you so much for that clarification. Next question. I've heard the EIDL can only be applied for after an SBA application is submitted. True or false?
So of course you've got to go on and put the original information in, and there again, the original information does not essentially mean that you have a successful application. You only get the $10,000 after there's a successful application, and not everybody will get it. My understanding is after you have a successful application, then you go through an underwriting process. So far as the timing on that underwriting process, I have no clue. I would imagine it's going to be several months. I'm not certain about that though.
Okay. All right, Andy, why don't you field this one? What do we tell a client whose bank is not participating in the PPP program and other banks are prioritizing current customers?
Well, here's the challenge we face there. As it stands right now, and I'm going to let the cat out of the bag, multi-funding does not have a specific answer. We have heard, and we are looking at other resources. You guys realize we're working our butts off on this, that there are other lenders out there that are accepting clients regardless. We are vetting those. We're separating hearsay rumor to find out the legit. We've had a couple of ERT team members bring us a potential source, but as it stands right now, we're not sure. What we're ultimately hoping for is that AMI and multi-funding come up with those relationships and we can stay with somebody who's vetted. But the answer is we're working on it. And we're just going to hold it out to you. If you do run across a lender that meets the criteria and is opening their doors to roll these loans out, let us know. That's something you could PM to us, those who are on the task force. We'd be glad to hear it. You know, we're trying to be a resource. Once again, we're trying to get the money flowing. We're trying to get this out there. And if Bank of America and all the big ones are going to drag their feet, let's get the money out to our people as soon as we can. So that's what I'm gonna say about that.
Thank you, Andy. And I'll just, I'll be the legal police here and just clarify that any outside resources that you find that come to the table, you know, those need to be vetted and they are not going to be viewed as ERT specialists. This is an unprecedented time. Everybody's just doing the best they can to try to help their CPAs and help their clients. But please do not represent anybody as an ERT specialist if they're not currently on our list. Next question. I read that for independent contractors, they need to be applying beginning on 4/10 for the PPP. Is that the same program as for bigger companies, or does that have different requirements? Ben, you want to jump on that?
Yeah, definitely. So businesses have the right to apply starting today, and independent contractors have the right starting on 4/10. Now, what is the definition of either? An independent contractor, in my opinion, is more of a sole proprietor, and they work maybe at one or two places, and they just do one thing, as opposed to a business where they have multiple clients, working with multiple people all the time. That's what I would say. But independent contractors, 4/10, small businesses today.
Thank you, Ben. And once again, we still have 90% of our attendees on the line, so we'll go through a couple more questions if the task force can continue on with us. Is it possible to receive more than 10K with the EIDL loan, and what is the interest rate? Obviously, that's a clarification for loan versus grant. Ben, would you like to take that for us?
Yeah, so far as the amount, they look at what you qualify for based off of your ability to pay. I believe I've read something that says they don't like a debt ratio of over a 1.25. So, and then they want a credit score of a 640 or better. But it's based off of ability to pay and profitability. So far as the interest rate goes, the interest rate is at a 3.75% for businesses and a 2.75% for nonprofit organizations.
Thank you, Ben. A quick follow-up here. Will a recording be made available? How soon? We will get the recording and the PowerPoint and Ben's calculator up onto the Base group as soon as possible. Just please be a little patient. It takes some time for the recording to process before that will be available. And obviously everyone on the task force also has their own businesses we're trying to run. We'll make every effort to get those out tonight or hopefully tomorrow morning, the latest. Okay, next question. Application for EIDL asks for gross revenues for the 12 months prior to the date of the disaster. I'm not sure if that's a question or it's just a clarifier.
So a lot of people ask in Maryland, should it be a run-in 12 or should it be calendar year 2019? That's really the question, in my opinion, which is a 1 month difference. You know, the run-in 12 is 2/1 to 2/1/19 until 1/31/20. there's absolutely no way that they're going to be able to quantify those numbers because there's nothing to tie back out to. From everything that I've read, they're going to want 2019 numbers from you if you have your 2019 tax return filed, and 2018 numbers if the 2018 tax return is filed. You need to do a calculation with your clients to see which is better. The higher the income, the more disaster relief you need normally.
Okay, Ben, we've had a couple of questions to clarify what you meant by when you said that they need to reapply for the disaster loan if they had applied before Sunday.
So prior to Sunday, if you put, or Sunday and prior, should I say, if you applied for the EIDL, then there was not an automatic way for the SBA to say you would qualify for the $10,000 grant. They put on their website, since they updated it, that if you applied Sunday or prior, you were not automatically put into the availability to qualify or the availability to get the $10,000 grant. So then you have to reapply or just fill out the paperwork again for the $10,000 grant.
Thank you. Next question, will the government confirm if a company had reduced revenues due to the disaster? If not, will the loan terms change?
Would you repeat the first part of that, please?
Sure. Will the government confirm if a company had reduced revenues due to the disaster? I'm going to assume that that's the requirement where you have to say that you've been impacted. If not, and I'm going to assume that means if they did not have reduced revenues, will the loan terms change?
So remember, you have until the end of this year to make the disaster loan application. Now, if you've already gone ahead, if you have already put the, the 7-minute application in with the SBA, you still have to qualify and go through underwriting. Now, you necessarily don't have to apply now. You could wait to see what the disaster will do to your business prior to requesting money. If you do that, you will have a better way to figure out how much to request. From everything that I've seen so far, the amount to request is negotiable, the deferment term is negotiable, and the term of the loan is negotiable. We do not have interim final rules yet on that. So until we have interim final rules, we don't know that for sure.
Thank you, Ben. Scrolling through the questions here, I think that we have hit on most of them in other capacities. We are 15 minutes over already, so I'd like to open the floor up to Andy and Michael to just give us some closing comments here. Michael, why don't we start with you?
Thanks, Marilyn. I want to thank everybody who's been supportive and participating. My encouragement to all of you is don't miss the opportunity. In the chaos, in the hubris, there's dust, and in the middle of battle, you stay focused on serving clients, whether you're getting paid or not. When everything settles, they're going to remember who was there for them. And kind of the hallmark of the whole ERT program is process will deliver revenue streams. I firmly believe, and I'm seeing it currently, I'm seeing future opportunity and revenue streams with clients who are begging, people begging to be our clients because of our service. So stay focused and bring them wisdom.
Okay, I'm kind of divided. Go ahead. I'm kind of divided. Do I fire up my end time revelation seminar on Armageddon, or do we reach out and help business owners? So I'm probably going to do both. So this is a cataclysmic event in world history, and our response. I don't know that I agree with our government's response, but we are where we are, and we have to step up with the toolboxes we've given and do the very best we can. And I think that is a responsibility. It's at the moment we've kind of all been preparing for, as far as understanding budgets and economics and how businesses operate. A lot of these folks are like we are. They're in uncharted territories. So we need to step up and give them leadership, give them first and foremost reassurance that we're going to do everything we can to help them and their employees and their businesses survive. So I would encourage everybody this afternoon to write a letter of encouragement once again. And if you're not sending these out on a regular basis, shame on you. You need to be encouraging as many people as you can. Look for the bright side here. We're optimists. We're survivors. I always reflect on this. We do not have the British burning the White House. We do not have the Southern troops sitting across the Potomac firing cannons at the White House. We do not have Sherman marching across Atlanta burning America. So we have survived worse things. So be a beacon, a light, and hope, and go out there and be the change you want to be.
Thank you, Michael and Andy. Anton, I'm going to put you on the spot here. Do you have some final thoughts for us?
Well, I mean, I feel like, we've been talking about this for 11 years, not specifically the coronavirus, but the value of professionals coming together and working strategically and synergistically rather than kind of pointing fingers or competing with one another. I think this is such a perfect example of why clients are better served when professionals come together on their behalf, compare notes, share their skill sets. So I love all of the work that the four of you are doing. I'm so grateful for that. And I'm excited. I just want to reiterate, this is an opportunity to really step up working together as synergistic professionals to better our clients.
And on that note, I would like to extend a silent round of applause to Michael and Andy, and most importantly, Ben, the fact that he has taken this time out of his own business to be on this task force and support us. Also to Multi-Funding, Jill McAleer has been in contact on a regular basis, me putting those webinars together every day. This is one heck of a team, and we are all very lucky to be on it. We hope that you have found the presentation valuable. We promise to get everything posted as soon as we can, and let's get out there and help some business owners. Everybody have a wonderful weekend, and we will be following up with you.
Very good. Thanks, Marilyn. Thanks, everyone.
Peace, everybody. Have a great weekend.